It is that time of the month again on the Australian Economic Data Calendar, where market players receive a ream of information to see what that does for the FX markets. So this week I decided to catch up with Hans Kunnen at St George Bank to discuss the ASX, Australian dollar and what he thinks we could expect from next week's market events. I'm Natalie MacDonald, this is Sydney Direct. Hans, thank you very much for taking the time to chat with us today. Much appreciated.
Pleasure.
Okay, so firstly, how would you characterise Australia's economic positioning globally post G20?
Well, I think after the G20 and during it, there was a lot of talk about free trade. We've signed up a free trade agreement with China. That, in the medium term, will be brilliant. In the short term, it assisted the currency as well. So our position post GFC is actually a touch better. And now with India also coming in and seeking to do a free trade, that's going to be helpful as well.
Now, the ASX did experience a bounce following China cutting its rates for the first time in 2 years. Does this pick up for the resources sector? Is that likely to lift what's been a slightly lacklustre share market performance of late?
Well, it should do. If China is going to grow at 7.5%, that is good for commodities. And the question though is well, why did they cut? If they cut because they're slowing and it doesn't work, then could it go the other way? So we have to wait and see what impact the lower rates have on China and its economic growth.
The Australian dollar also shifted higher with stimulus on the programme really for China and also Japan. We're unlikely to get RBA pleasing movements from the Australian currency, are we? No.
Since the cut, the currency has moved back a touch lower again, so it's actually back where it was before the Chinese cut their rate. So the Australian dollar is volatile. The RBA is not going to cut rates to get it lower. It's just going to have to wear it and see what happens in the months ahead.
Now, next week is that exciting haul of data that we have coming out of Australia. What for you is going to be the one that you're going to be watching the most closely?
The key one for Australia is capital expenditure. What is business doing in terms of investment in plant and equipment? It's been soft. Now that the mining construction boom is over, we're wondering what will replace it, and these figures will tell us whether the non-mining sector is actually planning to do further investment. So that's the key for us. Private sector capital expenditure is key to Australia's growth over the next 12 to 24 months.
And thank you so much for taking the time to chat to us today. Much appreciate your comments. Thank you.
Absolutely.
Lots of interesting tips there from Hans. That's all we've got time for right now, but the Dukascopy TV team will be keeping you updated on those events and plenty more, so do stay tuned. For now though, it's goodbye from me.